Welcome. This is Sonia Luna, CEO of Aviva Spectrum, talking about the true ROI for BlackLine in the mid-market space. I wanted to share with you why I wanted to do it because we get a lot of questions as to how to calculate ROI and what's out there in the marketplace, especially from BlackLine's perspective. So let's get into it in terms of what we came up with. The mid-market is definitely different from, let's say, the enterprise type clients that BlackLine offers its products. So why I wanted to create our own unique template that truly matters to most board members, CFOs, and other executives was because the case studies that I saw were just quite frankly too large. They would show huge companies like Cox Communications, Coca-Cola, certain mining companies in Australia that were validated by third-party research firms. This is all well and good and very well intentioned. However, in the mid-market, there were certain line items I quite frankly didn't really believe that there were true assumptions that the CFO was really tracking, such as paper costs and some of the hosting and server costs. Because what you have to do is you have to take those costs and on a per accounting transaction basis, like an account rec, you'd have to know the dollar threshold per line item of that amount. So the hosting costs, spread it not only for every accounting transaction, but also the specific transactions related to account recs, the time spent to do an account rec. Other items that I felt we saw was a lack of focus of the very detailed information of what goes into the labor costs, the timing, etc., which is really the number one savings you're going to get when you evaluate BlackLine pre and post. I'm going to explain how our template works line item by line item with you very shortly, and yes, you can get a free download of it, but based on the two most popular modules, Recs and Tasks, we're going to share with you in this template how we came up with the ROI calculations, and we also included some of the licensing fees to include both employees and consultants. This model really truly allows you a lot of flexibility for your own environment when it comes to the labor cost rates and yes, even time. So let's take a look at the Excel spreadsheet here, our template. Here you'll see a summary, account rec tab, tasks, and then the licensing costs. Now, this will hyperlink to our account recs. This is the pre-implementation, and you'll see a post-implementation down here. Hard code the number of account recs that you actually have in your environment. Estimate the time that it takes in terms of hours. Here we don't have minutes, but this is 0.75 hours. Days it takes to close, if you were to multiply that out. The number of team members involved in the preparation role. And then it'll give you the team days for that prepare role, and you'll see we have different roles for reviewer, executive, and you'll see the time scales down, right, by reviewer by 0.5, executive 0.25 for each of these line items that are called a number of account recs. Now, let's say you don't know the estimated time. Let's say you know the days it takes. Here's a quick trick to back into the number of hours or the estimated hours it takes per line item. If you know your prepare role is 90% finished 8 days after the close, right? In other words, they're working nonstop to get that up to 90% done after 8 business days. You know the number of recs that they're working on based on each of those preparers or the total preparers, right, involved. And you know the number of team members. So what it does, this calculation backs into the estimated hours it takes on a rec basis. So all I did is take, 8 days, a number of account recs, a number of repairs, and boom, I have 0.76 in terms of the estimated hours, right, per team member or per account rec. Now, direct labor costs, you'll see I put labor costs is just regular salary, $55K over 2,080 hours. This is my hourly rate. Overhead rate percentage is just a function of this rate, and you'll see that I put 37%. What does this include? Payroll taxes, insurance, rental, all those other overhead costs associated with having staff. You can obviously augment it to your own overhead rate calculation, but I did it for both the prepare role, reviewer role, and executive role, and obviously you can make as many columns as you like based on the different types of reviewers. Maybe their salaries are very specific types of supervisors, etc. Hey, knock yourself out. This is just a template as a starting point. Let's look at the actual pre-implementation, right? Before you have BlackLine, what happens? take the number of team days, right, and put the number of, multiply that out by the direct labor cost, and then you're looking at how many hours in a day, so you know it's 8 hours per day that they're working on average. If you think that overtime is included, you can put 10 hours here instead of 8. The number of employees, right, and then you're looking at the extended monthly cost. The quarterly cost is just a function of taking that month and multiplying it by 4. This same model is applied to the reviewer role, executive role, and then boom, you have the grand total here. And you have a total of 6 employees in this mid-market model. Now, post-implementation, all right, number of recs, time, days to close, number of preparers, team days, etc. Everything flows the same as the pre-implementation. Now, the difference here is time, right? You're setting a goal saying the preparer, instead of 0.75 hours, they should be doing it now in 0.5. What's the driver? It is those automated system recs, okay? So you are telling the team that if you go with this solution, you are expecting them to shave off a good, in this case, 0.25, right? So 15 minutes per rack, so that they're more efficient, because the system is now going to act like the preparer role, especially for those prepaid accounts or those fixed asset related accounts. The review role, again, some savings, as well as maybe the executive role. So that being said, this line item is a guess, yes, but you have to set a goal of how much time you're really going to save. Now, given this, you'll see the extended monthly cost, same model as the pre-implementation costs. And yes, of course, if you multiply this by 4, you get your quarterly cost. Now, in our summary, you'll see that we have the pre-labor, right, cost. This includes overhead, and then post. So we have a net savings of $7 grand on a monthly basis. Now, you'll see here the annual outlook. You'll see it's multiplied by 4. All I did is I took the sum of these monthly saving items and I multiplied it 4. The difference between our tasks ROI calculation is this. When I looked at the ROI models that BlackLine provided, they would lump tasks as if they were all equal to each other. In the mid-market, we noticed that monthly tasks take up a certain amount of time. Quarterly tasks sometimes have unique items, such as, let's say once a quarter you need to do certain reporting of certain types of footnotes, or there's a special rec related to the quarter because it's a disclosure item. Or it could be internal reports that you're giving management that deal with the close. What we did is we just segregated out, and we did make it equal in terms of the total costs when it came to monthly tasks. But what we wanted to do is give you an ROI template that if you felt that the quarterly tasks were more manually intensive, of course the cost is going to go up. But at least you're exposing that line item, because labor is the #1 driver on this ROI model for BlackLine. So now if we go to the checklist here, in terms of this tasks, we took the number of monthly tasks here. We said the preparer has 15, reviewer has 8, executive has 5 very specific items. Of course, time, you're going to have to estimate the amount of time it takes on an average basis for some of these month-end tasks. So the reviewer role, 0.5 here in terms of, this is based on hours, 0.25 in terms of hours, and the days it takes to complete. And then we did the same modeling that we did with the account rec and looking at the entire team. How long does it take to get these administrative tasks done? So it doesn't take them a full day, the entire team, but it does take some time, about a half a day. Labor cost, same model that we did in the account rec. Month-end task in terms of the cost, right? So we're just taking that labor, this rate multiplied by days, and then obviously there's so many hours to a day, number of employees, and you get your 408 here for the preparer role, reviewer, etc., and executive role. So that being said, you look at the post implementation. Okay, so what's really driving down certain items is you can play with this and say, what tasks can I get the system to do, right? Some dependency. So instead of it being equal, right? So here we have 15 to 15 tasks. Some companies are expecting that based on dependencies that BlackLine offers, the quantity actually goes down. Okay, so you have to really think through which tasks could be dependent. If the system does certain number of tasks for you based on rules, maybe the manual, the people time, right, that it really takes for those tasks is not really 15 independent, it's actually 10 or 11, etc. So you're going to need an implementation partner that can kind of walk you through how dependencies work, and more importantly, when you can really get a great post-implementation ROI calculation. So time, again, shaving off a little bit of time now on those tasks now that it's been in BlackLine, so you'll see some of these numbers and the drivers of these numbers you can play with. So the same model as the account rec item that I just walked you through, labor rate, etc. So you'll see monthly close costs and you just multiply by 4 to get the quarterly items. Now let's get into licensing costs. In this model, we put in 6 employees. We have a consultant that makes up the 7th user. Now, BlackLine does offer discount pricing for consultants, people that really just need a view access only. But if you have consultants that actually need to play with it, they're a system admin role, that's a different ballgame. This ROI model assumes that they have a big significant discount, like external auditors have view access only in this model. So please pay attention to that. Now, the pricing 205 multiplied by 12, pricing varies, right? The more users you have, the more discounts, et cetera. So is it 205? If it's 175, this is just a template. You're going to have to put those numbers together yourself, but in this template allows you to calculate the total cost, but it leaves wiggle room, obviously, to keep in mind there could be consultants, in this case external auditors, that need to be part of your ROI model. So that being said, the licensing cost is $15,990 here. Implementation costs, this includes both internal and external costs. That's very, very important for an ROI model. This is something that I really want you guys to focus in on when you do come up with your own calculation. And you'll see we put a notation that this is a hard number that you'll need to calculate. We do have a template that offers how you can come up with your own internal and external implementation costs, but for this model, let's go with $8,000. Your total investment is $23,000. Now you're looking at, we took apart these quarterly, these month-end tasks, and we said quarterly roughly around the same amount, but we wanted to separate them out just so we knew in our model that quarterly tasks and annual related tasks are 2 different buckets from a staffing perspective and what they're really doing, that quarter and annual assessment for the racks and the close. So multiply the pre-BlackLine month-end items to 4 here in this calculation. You'll see post also multiplied by 4, total savings of $31,000, which is a function just across here. And then you have an ROI model annual first year of, if this is the true investment you're making in BlackLine, here's your total first year annual savings of $31,000, and therefore you have an ROI of 133%. Now, again, this is a template. However, we know from practical discussions with CFOs, other board members of various companies in the mid-market space, this is probably the best go-to ROI model for them, because this template really discusses about time. They know their close calendar, they know how many recs they have, and they can back into, on average, what is it taking their people to do in terms of time to get stuff done. Of course, there's wiggle room on the labor costs in this overhead rate, but really this is one of the best templates with a lot of details and a little bit of tips and tricks back here to back in to time that I've already explained to you. Now, let's wrap this up. My final tips on an ROI model in the mid-market space is licensing fees. Please consider outside consultants, not just your external auditors, but let's say implementation partners that might need full access. To review your close calendar, that's probably one of the best indicators of how much time it takes really for your people to get to 90% complete when it comes to those recs and those tasks. Lastly, your ROI model is only best of what you already measure, okay? So when certain people start giving you ROI models that have server costs and paper and storage and all of that good costs, unless you're showing to the board or the CEO on a per accounting transaction basis, if you're telling them that you're allocating a rate of cost on paper because of paper and the Xerox machine leasing costs, etc., unless you're already doing that, I would not make an argument to my executives and the board by adding in these things that I don't even measure already on a per accounting transaction basis. So because I get a lot of the rolling of the eyes when other people present their ROI models, and it includes things that the accounting department normally has never tracked in terms of cost to their department. So measure what really matters. Now, our website, you can check out some of the BlackLine services in our blog in our BlackLine services, which tells you some of the key features of what to consider on your phases to implement BlackLine. Okay, some of the critical components of being successful is right here in the services page. Insights is our blog and our interviews of people who have either implemented BlackLine, or more importantly, they may not have implemented BlackLine, but they have done massive transformation efforts in their organization. So to connect with us, please call us at 424-625-0241 or email us at info@avivaspectrum. What I am offering you is a potential to not only download this template here, it'll be at the Insights, but you can get a complimentary ROI review of not only the model that I shared with you, but if you've got something that you really feel is comfortable, valuable to your organization, we are willing to sit down with you when it comes to a financial transformation ROI model. So connect with us today to get your free ROI review with us here at Aviva Spectrum. And remember, when you calculate your choices, we hope you choose Aviva Spectrum.